Hey Bowtie Nation, Joseph Hogue here with the Let's Talk Money channel, and all you out there in the nation know how much I love real estate. It's where I got my start as a commercial property analyst, and no other asset class has created as much family wealth as property. I truly believe every investor needs some exposure to real estate in their portfolio. That can be tough though when one property alone can set you back tens of thousands for a down payment. But with REIT stocks, real estate investment trusts, you can put property in your portfolio just like you do with any other stock. REITs are companies that own real estate, usually hundreds or even thousands of properties, and then sell shares to investors. Now, this year has been a tough one for REITs, with the overall market down more than 7%, and some property types plunging as much as 30 and 40%. So in this video, I'm going to show you which property types I'm watching for 2021, and then reveal the 5 REITs to buy now for cash flow and returns. I'll be using stockcard.io to narrow down that list. StockCard has a great search feature that's going to help you find stocks within a theme or a group. You just search for the topic, like REITs here, and then the drop-down is going to show you all the stocks in that group or the theme. Don't forget to check out our 2021 Bowtie Nation portfolio on the platform. We're 2 months into the portfolio and already up more than 30%, beating the market by 25% over that time. I'll leave a link in the video description below. It's free to follow the portfolio, and you'll get notifications whenever I buy or sell from the list, even before these videos come out. As a special bonus though, for all you out there in the nation, I've negotiated an exclusive discount. Use the promo code BowtieNation, that's all one word and lowercase, for an exclusive discount beyond the free trial. I know you want to get started, but you know I've got to send one last shout out to all you out there in the nation. Thank you for spending a part of your day to be here. If you're not part of that community yet, just click that little red subscribe button. It's free and you'll never miss an episode. First, let's just look back at this performance table for REIT stocks here by the National Association of REITs. I think this can really help put this all in perspective and pick out our targets for next year. On the left here, you see the individual property types or sectors of the market. And working down the list here, retail was probably the hardest hit, with REITs in the sector falling 28% on average, and malls falling as much as 40%. Now, I do think we could be set up for a quick bounce in the first half of this year, especially in those hardest hit mall properties like Simon Property Group, SPG, and Macerich, ticker MAC. But you really have to be careful longer term in these names. That shift to online spending really accelerated this year, and it's only going to get worse, so that traditional retail property sector isn't going to be out of the woods even after COVID. Residential property was hit as well, with REITs there falling 13% on average, and there could still be more pain to come for the first half of the year. It's estimated as many as 14 million Americans are at risk for eviction come January, with over $25 billion in back rent due. Now, I don't know, I just don't see Congress stepping in to do that much, and even some rent forgiveness isn't going to save millions with thousands in rent coming due. Nation, I've had my own rental properties for more than 20 years now, and most people faced with the choice between paying a couple grand in back rent versus just moving, they're just going to move. Now, that's going to increase the tenant and the maintenance costs for a lot of residential REITs, and I think you have to be careful for at least another quarter or two in these names. It's that lodging and resorts property sector where I think you could really see a lot of that pent-up demand that everybody's talking about. It could take another quarter to start coming back, but the market is forward-looking here, so I like these hotel REITs even before that rebound happens. So we can use the search tool for REITs in StockCard, and here it drops down with all the property types. So down here to hotel and motels, and the first stock I'm watching, $2.9 billion APLE Hospitality, ticker APLE. APLE owns 235 hotels in 34 states and across 13 brands, including Hilton, Marriott, and the Hyatt. A full third of the hotels are that extended stay type, so a little more stable in that longer term cash flow. Now, Apple had one of the best financial positions going into this year and has just 40% debt to total capital, so not highly leveraged like a lot of these other REITs. It's got $381 million in liquidity through cash and a loan revolver, with no big debt maturities until 2022. Now, the company turned cash flow positive in July, with all 235 hotels open and receiving reservations. You see here the occupancy rate by month, and it's really impressive that a company can be cash flow positive even at just 50% occupancy. Now, Apple Hospitality was paying a monthly dividend of 10 cents a share, but stopped it in March to protect that cash flow. If we do see any kind of a turnaround, I think they bring that dividend back by mid-year, and it could be up to a 9% yield on this current price. Even if shares do take a year or two to get back to that $15 or $16 a share, that's a solid double-digit return plus the dividend. Healthcare is going to be another favorite of mine, not just in the REIT stocks here, but that broader sector as well. We see here that REITs have fallen about 13.9% this year, but that's on higher costs to COVID services and really having to postpone some of those more profitable elective surgeries. So as those electives start coming back, I think the entire healthcare sector has a really good year in 2021, and REITs are on my list here as well. And one healthcare REIT I've owned for years is Welltower, ticker WELL. Now, this is a senior living REIT with about 1,300 properties across the United States, but also with 22 million square feet of that outpatient facilities. And the outpatient and the health services properties are about 31% of that net operating income. So that's really given the company that stability and cash flow throughout the pandemic. Another 22% of the portfolio is in triple net leases, which means the senior living property owners, or the managers, they pay all the costs, and Welltower just collects those rent checks with no expenses. That business model has helped Welltower keep paying its dividend, even when most other healthcare REITs and REITs in general have paused their payments. The payment was cut a little bit in February, but it's still a 3.7% yield at this point, and shares have that 23% upside to where they were at the beginning of the year. The company has $5.2 billion in balance sheet liquidity, with $2.2 billion of that in cash. Here you see the debt maturity schedule at just $341 million maturing next year and $1.3 billion in 2022, so no cash flow problems and plenty of financial flexibility. Investor sentiment tracked by Stockcard is about even on shares of Welltower, though the 50-day moving average has moved higher than the 200-day. That's a really good indicator of that upward momentum in the share price, and I like this one back up to that $80 a share plus the dividend. Medical Properties Trust, ticker MPW, is one of my favorite REIT stocks right now, and in fact, one that I highlighted recently in a Best Dividend Stocks video. MPW owns more than 390 hospitals, long-term care facilities, and other medical assets in 9 countries. At $17 billion in assets, it's the second largest owner of hospital beds in the United States, with 67% of its revenue from the States, 26% from Europe, and another 5% from Australia. And this is a very well diversified portfolio of assets. Maybe a little heavy in that general acute care at 80% of assets, but very little of the senior care facilities that have hurt medical REITs over the past year. And I love the business model for this company. It uses a sale leaseback strategy for acquisitions, which means it buys those medical properties from the healthcare companies and then leases the property back to them through long-term contracts. Now, servicers like this because it frees them up to focus on what they do best, that healthcare service, and then MPW can focus on running the real estate. So this is decades of potential growth as the company takes advantage of these ultra low interest rates in the market to consolidate all those medical properties out there, with gross assets growing at a 30% annualized pace over the last decade. The company then puts these leases on that triple net model, which means that, again, that the tenant bears all the property costs. These are long-term leases, up to 20 years, and 97% of them have those inflation-based rent escalators. The company just announced its 8th consecutive year of dividend increases with a yield of 5.1% on the shares. Analysts have an average target of about $21.29 per share over the next year, but I think it can easily get back to a high around $24 each for that 20% return plus the dividend yield. Here at the bottom of the table, infrastructure and data centers did really well this year. With the boom in 5G coming and those data centers needed to stream all the internet traffic, these two groups were up 10 and 17% through November. Now, valuations are a little more expensive here in these two property sectors, but I think you can still pick up a few of these for that strong long-term investment, especially as the 5G and the data needs just keep on growing. Finding these on Stockcard, we search again for REITs, and these are going to be in that specialty REIT category. So we click through here and find 19 REITs we can research. Again though, don't forget, if you're going to use Stockcard to search or to follow our portfolio, use that promo code BOWTIENATION, all one word and lowercase, for that extra discount. Equinix, ticker EQIX, is a leader in the data center space and an amazing track record for growth. The company has a global footprint of 227 data centers in 26 countries, with an 8% revenue growth expected this year and 71 straight quarters of increasing sales. Now, that data center property sector, that is the growth market in REITs, with not only the increase in streaming this year, but also the coming increase in that 5G data and just the Internet of Things connections. Equinix has 46 approved expansions in the works, including a new joint venture structure that's really going to allow for that faster growth. The company has extremely stable cash flows in its long lease structure, with just 2% of leased square footage up for renewal prior to 2023. And you see that almost all the leases here are locked in until later in the decade or even past 2034. Now, the dividend here is only 1.5%, but the payment has grown by 12% on an annual pace over the last 3 years. and shares have produced a 20% annualized total return over the last 5 years. Next here for that 5G rollout is another popular REIT, cell tower provider American Tower, ticker AMT. This company is easily the largest cell tower provider with over 181,000 sites on just about every continent. And this market could be ready for just exponential growth in that data demand. Even in the US, where pretty much everyone owns a smartphone already, data usage is expected to rise 32% a year on that ramp up in 5G and the Internet of Things connectivity. So not only are we still seeing smartphone adoption pick up in those emerging countries, but overall data usage globally is set to jump. All of this meaning that more towers and more infrastructure is going to be needed. In fact, the company has booked a consistent 9.4% annual pace in revenue growth over the last 3 years and has increased the dividend payment by 20% a year over the last 3. The shares have come down about 15% on valuation concerns since July, but even after that have produced a 21% annualized return over the last 5 years. So just maybe an opportunity to get in here on a great long-term pick while it's at this lower price. Click on the video to the right for the 5G stocks to buy right now for that coming explosion in Internet of Things and 5G service. 5 stocks that will benefit first in this evolution. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.